Welcome back to QuickBooks. So today we're going to be looking at Chapter 3, which is another continuation of customers, right? It says right here, additional customers transaction. So again, this book tells you that you need to use customers 21 portable file. Okay, and here's the password. So what this section actually does is, yes, well, what happens when customers return items? What happens if customers don't pay? How else can we, you know, continue doing business as usual? And also, how do we write off bad debt? And also, how do we, you know, send customers some statements so about their activity within the business. So in this case, that's what we are doing today. We're going to take a look at this chapter here. Okay, so I already have the company file opened already. So now all I have to do is just go ahead and start. So first order of business says, well, let's talk about recording customer refunds, okay? So in this case, when we're looking at our customers, always, as part of business, we have to always assume, well, if we sell a product to our customers, what is the likelihood that they are going to return a product? Because when we look at business, right, we are all about customer satisfaction. When we sell a product, we want to ensure that the customer is happy about that product and that they, it brings them back into our company so that they can come back and purchase either more or support us even more. Okay? But the thing about that is that because we are looking for trying to sell a product and we want to ensure that it is being sold, we have to also assume that, well, not everybody is going to be satisfied with our product. We have to assume that, the customers must have opportunities to go ahead and, return the product. So this is the section that we're going to be looking at. Now, this is where I was talking to you guys about the difference between a vendor credit and a credit memo. Okay, that's what we're going to be learning today. Today, we're talking about credit memos. So, what does a credit memo do? Well, it does essentially the same thing. If a customer decides to want to return a product, demand for a discount, or if they're trying to get an allowance, okay? So as a small business, you can haggle prices with them, okay? Another one too is you can also, if a customer, for example, like they are trying to get store credit or something like that, return, or if we are understocked or overstocked, right? Or if the customer overpays, right? That's another way that we could credit our customers, right? We would send them a credit, and we have a couple of options that we could do. We could either, number one, give them their refund. Two, retain it as a future credit. Or three, we can apply it to their actual invoice. Okay. So that's the thing right here. So we're going to now talk about how to create a credit memo. Okay. First by looking at our customers. Okay. So when a customer, right, the only way that we're able to create a credit memo is indeed if a customer has purchased from us. Okay. Okay, so our first example that we're going to take a look at is going to be a proper refund, okay? So in order to go ahead and create a credit memo, we have to go ahead and either look up the customer's information, or we would yeah, you have to look up the customer's information. That was the best way to do it. Now, yes, you can create a credit memo without looking at the individual's invoices, but the best way to do it is to go ahead and open up that person's order and then refund them, and then use that form to refund or create their credit memo. Because if you do not do that, right, the difference between creating a credit memo without the invoice is, you don't get to see all the information. You have to memorize it, and you have to put everything in there manually. It will not pull the information for you. But if you were to use the like invoice, right, you'd be able to make it that much more easier for the customer, or it makes it that much more easier to be able to create the credit memo, because it will transfer all the information right across over into your books, or into the credit memo, so then you don't have to do anything. So it makes it that much more easier to be able to create a transaction. Okay? So let's go ahead and locate Mr. Bob Mason's invoice, because that's the very first thing, like, right? If you do not do that, then you will, again, it will not be easier. You would have to memorize everything in order for you to create that. So let's go ahead and go down below. So they do say that you could go to customer payments and click that back button. But again, sometimes it doesn't always work. So if I go back, is it Bob Mason? Yes, it is, okay? And it's for the one that he purchased from us, right? He has 2 of them. But in this case, no, I don't want to use this, because sometimes it can get confusing. Sometimes, if you don't know what you're looking for, but you know the idea that you have the person, you can't just simply just look them up and locate them. So again, I could go to Bob Mason here on my customers. Where is Bob Mason? Okay, Bob Mason, and I can look up the invoice. We are looking at invoice number 3947. 3947. Okay. I can go ahead and double click on that, and then it's going to show me this right here. All right, this invoice right here. So here, what I want to do is Mr. Bob Mason decides that he wants to, he purchased 30 stacks of photo paper, but because he didn't use all of them, he's going to say, I want to return them. Okay, well, like I mentioned before, right, if you use the invoice, it makes it that much more easier to create the credit memo. Right at the top, you have the refunds and returns button. However, if you do not see that, okay, or if you do not have that section right there, right, then what you can do is, well, if again, you don't have to necessarily go through the invoice to create one, right? On the home page, you have the refunds and the credits icon on the home page. If you go to your customers, right, you also have the refunds and credits, right? This one should be you should have invoices, credit. You should have it under create credit memos. Okay. If you go to the customer center, right, you'd be able to create a credit memo from here as well, right? You can right click on anywhere and create a credit memo. You can even go up at the top under new transactions and be able to do a credit memo this way, credit memo, and as well as manage transactions, right? You have the credit memo that way. But like I mentioned before, if you were to click on this credit memo, right, I would literally have to fill in everything manually, okay? But to save you some time and to make sure that you are filling everything in correctly, the best way to do it is to just open up the invoice immediately, right? And then go ahead and create your credit memo by selecting refunds and credits at the top. Because watch this. So if I were to do this, right, and I click refund/credit, it's going to automatically fill in the information for me. And all I have to do is just adjust it. That will save me 10 times more time. I don't have to keep looking back at this invoice because, look, it copied everything over for me, okay, except for the invoice number, okay, and that's the only thing. But you got the person, you got the you got the materials that they bought from you, okay. So what you're gonna do here is you're just gonna modify the information that you see. So in this case, right, we want to modify it and say, well, he is trying to return 10 of those photo papers, okay. Make sure you put in the date, okay. So in this case, the date is going to be excuse me, the 15th of February, okay, of last year, of course. Okay, so 15 of February, okay. Rule of thumb here is you always want to make an association from the previous invoice. So in this case, the invoice for this one was 3947. Now the best way to make sure that this is in regards to this very same invoice, right? They do recommend you to use a letter C for credit, okay? So very similar to a vendor credit, right? You want to make sure that if you are using the vendor credit, you want to apply it to the bill. This is the same situation here to keep your thoughts and or ideas organized. Is you want to make a linkage from this credit memo to that individual's invoice. Okay, and because he wants to return 10 of them, right? You want to go ahead and come over here and you're going to modify it. Now, check this out. This item is a taxed item. So by clicking this, right, and making modifications, it will even take away the tax. So as you can see, $10.27 is going to be refunded as tax back. Okay? And then now what else do you have to modify? So you still have the thank you for your business, but in this case, I'm going to go ahead and make a note that I'm refund 10 photo papers. Okay? And because he paid already, right? If you look at the invoice, you'll know that he already paid for this. Then what I'm going to do is I am going to be giving him a refund. Okay? So I'm going to click save and close. Once everything looks good, right? We're going to go ahead and save and close because now the amount that I'm refunding is $133.80. So I click save and close. I get that beep of approval. And then here it tells me, how do I want to give the refund back, right? I have 3 options like I've mentioned earlier, right? One, I can retain it as a future credit, okay? What does this mean? So oftentimes a lot of businesses they'll be like, well, how about I give you credit so that in the future when you buy something from my store, I'll go ahead and use it, right? This is very typical and very similar to store credit, right? They're not going to let you they're not going to give you your money back. They're going to keep you coming back. And by keeping coming you back is by retaining a credit, an available credit for you, saying, hey, well, the next time you shop here, because we gave you a credit from this refund, we'll go ahead and let you apply it for the next invoice. So again, this one's very similar to store credit, right? Second one, straightforward, give a full refund. Or 3, apply to an invoice. So if an individual has not paid for their items, right, you can choose to apply to an invoice, right? Again, or if they cancel an item, yes, because you already created the invoice for them, yes, you can apply it to the invoice. So it just reduces the amount that they owe us. Okay, so in this case, straightforward because Bob already paid us. So in this case, we are going to give him a refund, and I'm going to click OK. Now, here is the window where, well, if we're giving him a refund, how are you going to pay him back? In this case, I'm going to do it as a form of a check. Okay? It's going to come out of my checking account. It's going to be written out to Bob Mason for this. Okay? His address is there. Now, here is the memo. And then I want you to write here, note that this is refund on 10 photo papers. Okay. It's a San Jose location because he's from San Jose. And again, I'm going to save this off to be printed later because I got to put my signature and so on and so forth. So I click OK. All right, once you get that beep approval, now let's take a look at the invoice, right? The invoice shows us that, well, yes, Mr. Bob Mason purchased 30 of those items, but down below here, when we look down below, it says that we have the payment received and so on and so forth, right? But what I could do is if I go to the actual customer center, right, it's going to show me that I actually gave him a refund. Okay? Bob Mason. Okay? And here it says right here, because we use the same number as the invoice itself, 3947, but this time it's a C, and then it gave him a credit memo. So in this case, it didn't apply to the invoice because he paid for it, right? If you saw the top, it was green and it said he paid for it. So in this case, this is us reissuing out a refund. Okay? Any questions in regards to issuing a refund?
No. I have a question, please.
Yes.
To verify the credit memo, can you also go to the icon bar and open customers and look up the, the customer name?
Yes, because on the icon bar, it gives you the customer center. Yes.
Okay.
Yes.
That's also another way instead of going to the customer center in the homepage.
Yes, because there are 3 ways to get to the customer center, right? Homepage, menu bar at the top, customers menu at the very, if you click on it, it's the very first one. And then on the icon bar, yes, it is your customer center is on the icon bar. But at the end of the day, once you click that, you have to locate the actual individual customer to see his transaction here. But if you want to, and I'll show you this in chapter 6, for finding specific transactions, if you're not quite sure or you can't remember where your transactions are, you can go ahead and click transactions under customer center. And we just issued a credit memo. Well, there it is. Okay.
Okay,
But
thank you.
yes, so there are alternative ways to get to the customer center, and yes, you can either go to home page, menu bar, or icon bar. Okay. So, okay, so other than that, yeah, no problem. Okay, so other than that, let's go ahead and take a look at the next one. So, after we, reissued Bob Mason their credits memo, right? What happens if you want to reissue credit memos for credit card transactions? Yes, it is possible, but there are 2 things that you need to know. Whether one of is automatically taking it out from the bank and sending it to the individual, or you have to manually call the credit card company and actually return the money, then that's going to be two separate things. However, you can refund your customer, especially if they use a credit card transaction. And let's go ahead and show you how to do so. So, if you remember, we can go ahead and uh, let's look up Maria Cruz. Okay, Maria Cruz has a bunch of transactions. So if I locate Maria Cruz and she has a branch opening, so here are the overall invoices and jobs that we've done for Maria Cruz. So the one that we're looking for particularly is going to be Maria Cruz for the invoice. So we want to return to her $200, okay, or $250, okay, for invoice number 102. So let's take a look at invoice number 102. Okay, so I'm gonna double click on it. So again, the best way to be able to do this is to just go straight to the individual's invoice and click on that return and refund, okay? Because that way it will copy the information over. But if you do not do this, again, you're just gonna have to memorize the details and just refund what they're gonna refund for. Now, most cases, what you can do too is if it's a person that's just coming in store, you just refund them for right then and there because you know exactly what they're returning. But this is on an invoice, so that's a huge difference there. This isn't like a regular customer sale. So once I have this window here, I'm going to go ahead and click on that return/refund once again. So here, right, we could say that, well, what if she only needed 2 photo sessions, or only 2 photo sessions, or 2 photographers actually showed up. Maybe they called in sick last minute and only 2 of them showed up. Well, in this case, if that was true, then what we're going to do is we're going to refund her for those two photographers, right? So in this case, now we need to change our name because, once again, it's taking whatever we put in the last credit memo. You always want to associate and link it to the actual invoice because that's going to, again, make a linkage between the invoice and this credit memo. Okay, so here we are. We're returning 2 photographers. Okay, and what I'm going to do here is also make a note here that we are refund 2 photographers. Okay. Yeah, once again, because it is a service, right? It's not going to charge us tax. So in this case, we're cleared that we're going to refund her $250. Now, once I am here, the date is still the 15th. Okay. Now I can go ahead and click save and close, and how I'm going to reissue them is going to be pretty straightforward, right? We've done this before. We need to give them a refund because Maria, if you remember from last class, she paid all 3 invoices using her credit card. So I'm going to go ahead and click OK, give a refund. So you're going to get this exact window once again. Now, this is where the difference is going to be. Because you have to actually, if you want the actual credit card payment to go through automatically for you and refund it to their account, you need to subscribe to QuickBooks Payments. Okay, QuickBooks Payments is a addition to the QuickBooks itself, and it automatically processes credit card transactions, whether it's on your end or whether it is on a customer's end, and it will do it for you automatically, but you have to pay for it. Okay, but in this case, if I'm doing it manually, what I have to do is I have to record it. right? So then I record that I gave this individual a refund. However, I would have to manually call the credit card company and tell them the exact transaction, exactly the amount that I'm going to be giving a refund for. So again, it is going to be a little more hassle because, of course, if you're not the accounts receivable or the accounts payable position, this can get difficult, especially if you're dealing with multiple individuals. Uh, uh, you know, especially with your customers, if you have a bunch of people who are just constantly, using their credit cards to pay for stuff and they want to return or make a refund, then you're better off to pay into it that subscription fee so that you don't have to deal with calling the credit card company and giving them a refund. Right? So that's just one thing there. But if it's just like one or two individuals, it's easy. You don't need to pay money to buy a subscription for another program if it's unnecessary because you could just simply just do it. That's why they usually say it will take 2 to 5 business days. If it's someone who's doing manual, it will take 5 days. If it's automatically you pay the services, it will take about 1 or 2 days. Okay. So that's a little key note that you need to know, that you do need a feature if you want QuickBooks to automatically reissue that refund directly to Maria Cruz's credit card. If not, you would have to manually do it yourself by calling up the credit card company and telling them the exact transaction that you're trying to refund to that person's credit card. So in this case, right, I would click here, and because she paid, okay, I don't know why the book says this, but it says she paid with the American Express card. So if you click on this, what you're going to see here is now you have this section where it says more information about payments. In this case, no, we don't need to. All right, so again, Maria Cruz for $250. Here's the date and transaction here, right? Refund document number 1, okay, her address, and then you're going to make a note here saying you're going to refund for 2 photographers, okay? Once you have that, right, now right here, this is where it says right here, process the card when refunding. This is where you have to have the payments for you to be able to do that, and we cannot do that because I don't necessarily we're not going to pay any money for this. So once you've done this, right, this is where you have to manually record that transaction. I click OK. So this is where I have to manually record that transaction now, because right now I just recorded that I gave her a refund, but it hasn't affected my account whatsoever, right? Because I don't have payment set up. So how do I manually record this transaction? Okay, if we have to manually do it, you literally have to go into you literally have to go to your you would have to go into your record deposits. So as you can see right here, you have a record deposits, and it's going to be that refund for Maria Cruz. See right here, refund, credit card refund, and then you would have to select it, right? And then you would have to click OK. And then now it shows up here, and look, it's for negative $250, and you would have to manually record this. So I would have to go ahead and click save and close. So that's what I mean by if you are not going to automatically or sign up or pay for a subscription, at that very bottom link, you could have just clicked process the refund automatically, and then it would just do it for you. But in this case, because we're doing it manually, you would have to go to your deposits and you would have to physically record this credit card refund. Okay, save and close. All right. Any questions there in regards to issuing a refund if it is a credit card? Okay? Excuse me. Next part that we have here is going to be looking at how we can write off bad debt. Okay? Now, in this case, it shows you one of the ways that you can write off bad debt. So, if a customer chooses to either one, refuse to pay, they cannot afford it, or they just one day just stopped paying for their payments or whatever it is, right? They just don't want to pay you anymore, or they cannot afford to pay you, or they filed for bankruptcy. You have to, at the end of the year, right? You have to write off bad debt. Okay, because again, if this is a potential sale that you know realistically you cannot ever claim money for, then there's no purpose to keep it in your books, okay? Because that's gonna hurt your profits at the end that you were to write off your bad debt. Now, here's a rule of thumb from the IRS. You can write up to the maximum of 5% of your actual accounts receivable, right? You can write up to 5% without the IRS, fining you for so much, okay? They allow you to take up to a 5% loss. So think about it. A huge corporation, right? They get $1 billion. Well, they get to take $50,000 right off right then and there, okay? Every single year. Because realistically, we have to understand that when customers refuse to pay or they cannot pay, and they just stopped making payments, it's because we have to consider that our customers, right? We don't understand, we don't know their financial status or stability, okay? We have to understand that it is also a risk of doing business, okay? It is a risk of doing business, right? You need to trust your customers enough to let them owe you money, and the possibility of them paying you is based on that little fine line, right? Saying, well, if you give me an IOU, I expect you to pay you. But that's on their word, right? And they signed agreements and what terminologies, or terms that you put on there, right? I'm going to charge you 18% if you do not make a payment, okay? Right? Because you're agreeing to let them buy your product without paying for it, right? So that's the assumption here, is that if you do allow your customers, you are at risk of potential bad debt. And that's just that's just a part of doing business is, well, your goal is to make as much money as possible, but if you have that 5% threshold that your customers are going to fault on their payments or just not make payments at all, well, at least you know that 95% of your business, right, you are going to actually make a profit because your customers are actually going to pay. So, how do I do this? Now, in this case, the book, because again, QuickBooks is actually a tax program, you need to understand, because of that idea, they teach you how to write off bad debt as a tax accountant. Now, in this case, you need to go to a lot more school than to be, if you want to be a tax accountant, you have to go beyond than this class. You have to go take a tax class, you have to take ethics, you have to take a lot of things. And if you want to do it, especially for taxation for small businesses or even for corporations, you do need to pursue a CPA, because no one's going to trust you to do their taxes. I can tell you that if you only have one level of classing, because not only do you have to read the government book and making sure that you know all the rules and regulations, those rules change every year. So you need to be on top of your stuff if you want to be a tax accountant. Now, in this class, right, we're just assuming that we are just not a tax accountant and we're just either the general accountant or we're just a simple person who's just trying to do their books in general. So in this case, I'm going to teach you both ways because this is what the book is going to teach you. So I have to teach you what the book teaches you. But as a real accountant that isn't a tax accountant, because you need to be at a higher level, I'm also going to teach you a second way, which is the actual accountant's way. Okay? So in this case, let's go ahead and take a look at what the book says. Okay? So we're going to go ahead and we're going to issue a refund for an individual. Okay, for this time, we're going to be looking at Anderson Wedding. All right, and we're going to take a look here. We're going to be looking at Anderson Wedding. So let's go ahead and take a look at her at them. Okay. Anderson Wedding. Okay. So how to write off. So you must create the accounts beforehand. Okay. All right. So here we already have the invoice already locked in, right? We have we're going to be looking at the Kumar and Sati, right? We're going to be looking at this invoice right here. Okay. So we have the invoice for us to go ahead and apply, right? This $190. Okay. But we do need to create those accounts ahead of time before we can go ahead and write off the bad debt. So what account are we specifically looking for? We are looking for the bad debt item. So in this case, here we are. We have the account bad debt. Okay? So then now what we got to do is we got to now create our bad debt item. Okay? We got to go ahead and create our bad debt item. So how do we do that? Well, again, this is kind of a glimpse into chapter 8. Okay? So what you're going to do is now that we have our bad debt account, right? It's an expense account. We now need to create our item. So here, all right, I'll teach you how to create items next week on Monday. But what I want to show you here is we need to go to items and services. Okay? So once again, when we take a look at items and services, what you're going to notice that these go on to your sales form. Okay? That's the most important thing that you need to know is what items do. Okay? Items are in regards to anything that has to do with your sales process. So again, it's a list of your products that you sell. It's a list of the services that you sell or service that you provide. It's a list of all the tax codes and things that you need to have in order to sell a product, good, or service. Okay? So what I'm going to do here is I'm going to go down below, right? Just like doing an account, and I'm going to create a new item. So once you have that, you have not 10 choices to be able to create an item. In this case, it's going to be an other charge. Okay? We'll explain items and what they do and what each item does later on in chapter 8. But in this case, I'm just following the book. The book says you're going to create an other charge item. Okay? So what are you going to name this? We're going to name this bad debt. Okay? Straightforward. And what's my description going to say? Well, right, bad debt. Okay, bad debt. To write off bad debt. Straightforward. Now, is this item taxable? Well, it depends on what I'm returning. But in this case, do I have a percentage or a solid amount? No, I don't. But, however, what account am I linking this to? Well, straightforward. Because I already have the bad debt expense account created, I'm going to link this to bad debt expense. Okay? And then now I can go ahead and proceed to go ahead and click OK. So then now I've created an other charge bad debt item. Okay? So now that I have the accounts and the items that I need, right? I have the account bad debt and I have the item, my bad debt item. So then now I can go ahead and proceed to go ahead and to write off the bad debt. Now, how do I do that? Straightforward. You're going to be creating a credit memo, right? Well, we talked about this, right? What does a credit memo do? It also, in other words, decreases your accounts receivable, okay? So if a person decides to choose they do not want to pay, right? That's what you're going to do. You're going to be using that to reduce your accounts receivable. So now that I created all my bad debt accounts, I have the items. So then now let's go ahead and use the direct write-off method, which is going to be exclusive only for tax accountants. So that's what the method is called, the direct write-off. Because what we're going to do is we're directly going to write off the bad debt, immediately write off the account receivable. Okay, so let's go ahead and take a look at our example here. We're going to look at Anderson Wedding, Sati, and okay, so here, right, like I mentioned before, do we have the actual invoice? Yes, we do. Invoice number 4003. So I'm going to double click on it. So here is the invoice here. Now, if you take a look at this information, if we're assuming that this is February, right? They've been outstanding for 2 months already. They have not done anything, and here they did not make a payment, and they owe me a total of $190. So let's take a look at this invoice very carefully. They still owe me $190, right? And they've been overdue for a long time. Okay, so this is what we're gonna do. We're gonna go ahead and create that credit memo using this invoice. So here you go. We have the credit memo. It pops all the information in here. However, this is what we have to do in order to write off the bad debt. Because in this case, we're not refunding them. We're going to write off the bad debt. So making sure that you got the dates all correct. So it says right here, we're looking at the 15th of February. Okay. And we're going to be looking at changing this, right? Remember, it is going to be whatever the invoice was, which is 4003, and we're going to put a letter C on here. Now, I want you to create a different kind of coding because, again, C is for credit. In this case, this is a bad debt. So if you want to put R for refund or, D for debt, whatever that you want to do, right? You're not obligated to follow whatever the book says. Whatever unique way that you want to make a difference in, or to when you are creating these credit memos, is whatever you want to use. But they do recommend you to use C to link the invoice to whatever the credit memo is together. Okay. So in this case, notice this, right? We have the item of the indoor photo session. In this case, if I'm going to be using or writing off bad debt, this is what I have to do. So I notice here it says that I have it for $190. What I would do is I'm going to take this and I'm going to clear it out because I'm going to put in a bad debt item. So bad debt item. So what I'm doing here now, you're going to get this message saying, hey, this item is associated with an expense. We know that. We know that what we're doing is we're trying to transfer over this amount indirectly into our account, from our accounts receivable directly into our bad debt expense account. So again, here, right? Your memo could be down below. We'll talk about that. Now it says, is it taxable? In this case, we can change it because it is non-taxable. So in this case, I'm going to put service because in this case, we didn't get charged it. And you don't have to put 2. You can put 1 for the total amount of $190. Okay. So there you go. So total amount that we are trying to write off is $190. And what you're going to do down below here is to write off bad debt on invoice number 4003. Okay? Right? Date looks good. This is for this individual, okay? Bad debt, and so on and so forth. One of them, it's a service non-taxable for $190. So $190 is what we're going to do. So this is very crucial that you need to memorize. Now, for any reason that you are trying to also write off the tax as well, if this was a taxed item, right, and you had it considered taxable, right, down below, it will calculate a tax for you. And then when you click on it, the credit memo will also undo the tax that you charged as well. So make sure you understand when you use a tax code. Okay. So once everything looks good, I'm going to go ahead and click Save and Close. So once again, you're going to get this window. What do you want to do with this credit memo? Do you want to retain it as a future credit? Do you want to give a refund or apply to an invoice? In this case, because we are using this credit to write off bad debt, we are going to click on Apply to an invoice, okay? And click OK. So now it's going to say, which invoice do you want to apply this on? Well, straightforward. We have the connection right here because we took that invoice and we created a credit memo. So obviously, this one's going to go straight to this invoice. So once we select it, right, make sure it's checked off. I'm going to go ahead and click Done. Okay. So here, notice this. Here's that invoice that we just looked at, right? And now it says it's fine. It's done. It's paid. But did they really pay? No. But let's take a look at the information down below. This is where it says, hey, well, we charged them $190. However, a payment that was applied, which is the credit memo, deducted $190. And look at that. Now, this invoice account balance is 0. And that's how you use the direct write-off to take an accounts receivable and directly take it off and put it as bad debt. So if I go ahead and save and close, what I can do here is now they don't owe me any money. And what I can do here is if I want to have proof of that transaction, I can go ahead and look up that bad debt expense item. So bad debt expense. Here we go. Bad debt. If I double click on it, remember it's a report. And if I go ahead and toggle this, it's going to show me that if I click all, come on, all. Now it tells me my bad debt expense is for $190. So I wrote it off and I put it into this account. Now it gives my accounts receivable because I never checked it before, but it is significantly less. So if I go to my accounts receivable account, it's going to show me this right here, that I got a credit refund for the $190. So as you can see here, it took it off. Okay, for the Anderson wedding. And we have a credit memo. So it removed it from the accounts receivable account and put it directly into the bad debt expense account. Okay, so that's that right there. Okay, any questions in regards to using the direct write-off method to create or to write off bad debt? Okay. Now, of course, you only write off bad debt if you exhausted every means of ways, every way to try to collect that money from that customer. Okay, and if they continue to refuse to pay, now usually rule of thumb is you should probably go as far as 6 months. You shouldn't wait. You shouldn't write it off right away because you should contact them to see what the response is because maybe they just lost their job and they told you, well, you have to give me some time to pay you back. Okay, or other situations is that you could give them forgiveness, right? But again, oftentimes you have to overlook and look at the situation at hand. is it this or is it that? Okay, so in this case, right, we are looking into properly writing off bad debt. We need to understand that with customers, if it's a person that just randomly out of the blue just decide they were making payments and they stopped making payments, call them, figure out what the situation is and what is wrong with them, and maybe you can waive a few fees on them, and then if they do end up paying again, then you don't need to write them off right away. So again, give them about 6 months period. But again, if you are that kind of person that just says, okay, well, especially for corporations, right? Corporations, they don't want to deal with customers like this. So if a person decides not to pay, boom, I'm going to charge you. If you don't pay the next month, I'm just going to write you off. Okay. So that's just a little FYI there. So any questions in regards to using the direct write-off method?
No.
All right, so let's go ahead and talk about the allowance method. So again, direct write-off method is strictly only for tax accountants to do, because in this case, right, when we're looking at our books, as an accountant, you are not allowed to do taxes, right? Just because it's not your field, it's not or in this case, right, when we talk about the areas of accounting and what jobs you can do. Again, if you're trying to be a tax accountant, you need to go way further than financial accounting. You need to take a tax class, you need to take ethics, and you need to go to look at the IRS, okay? And you also need to pursue a CPA, okay? To be a tax accountant, because a CPA basically says you are certified to do public accounting, meaning you are a professional in accounting. So that's going to give you that that certification to qualify you as to be an actual tax accountant, okay? There's a lot more rules and regulations in regards to that. But so if we are going to potentially do that, right, we need to once again make sure that the person that we're going to be creating that or writing off that debt for is going to be more or less we need to make sure that we actually charge them in the first place. So in this case, I'm going to go ahead and click on an invoice, and I'm going to go ahead and create one, just because again, this isn't from the book, this is off the book, but I definitely need to teach you this because if you do pursue tax accountant after this, great. If you aren't and you're just being a regular accountant, then you need to know this. Okay, so I'm going to go and pick on Mr. Bob Mason again. And let's say he bought something from us in November 3rd, okay, of the previous year. And let's say this was invoice, I don't know, 3950. Okay, let's just put a random number. And let's say he decided to purchase an outdoor photo session, okay, and he bought maybe, let's say he bought, let's say we bought 2 of them, and then he also purchased a photo session. A photo package. Okay, so premium photo, let's say standard, and he bought 1. Okay, so here I'm going to show you an example where you have a non-taxable item and a taxable item. Okay, and once again, I'm just going to leave this blank just because I just wanted to show you the what to do, okay, if Bob decides not to pay. So I'm going to go ahead and click San Jose. Everything looks good, and I'm going to click Save and Close. Okay, so if I go ahead and take a look at that transaction that I just created with Bob Mason, right, it will tell me right here that this invoice for $39.50 is way overdue, because again, they purchased it last year in November, and now it's fast forward. Let's say it's March or February, right? It's been roughly 4 to 6 months already since this person hasn't paid. So now we got to go ahead and we have to create that credit memo. Now, the rule of thumb here is what do we have to make sure that we have in order for you to be able to create this credit memo or to write off the bad debt? You need to, one, create the account, and second, create that item. So in this case, I don't have it, but I just wanted to show you that I do have the invoice in place. Okay. So therefore, I'm going to go to my chart of accounts, right? And what we're going to do is, I already know it doesn't exist, so I'm going to go ahead and create a new account for the allowance for doubtful accounts. Okay. Now, what is the allowance for doubtful accounts? It is a contra asset account, meaning, again, it is since it's a contra account, contra meaning the opposite, right? It just reduces the account receivable, but what it does is it's like a temporary placeholder until you confirm towards the end of the year when your tax accountant is actually doing your books. They are the ones that can write it off from the allowance for doubtful accounts and actually take it into consideration and write it off as bad debt. So in this case, what kind of account type is it going to be? This is actually going to be an other asset account, an other current asset, okay? It's not an accounts receivable, obviously, because we're not increasing accounts receivable, we're decreasing it. So the best way to be able to create this account is to create a other current asset. And I'm going to click OK. Now, what is this account called? Well, you choose. It could be any account that you want to use, right? It could be, we normally use allowance for doubtful accounts. Okay? And what this does is it is potential bad debt. And the great thing about using this one is that during the accounting year, if you do see a potential bad debt, so if someone decides to miss their payment and then miss it again, then you could just put them in a placeholder until you confirm with them saying, hey, what's going on? Why do you have this? So basically what you're doing is you're freezing their account. And that's exactly what we're doing here, is that this is the proper way to do it, and it's backed up by GAAP. Okay, account number 19500. I don't know. Okay, just a random account number, and it's going to be at the end of your assets. So once I have this, I'm going to go ahead and click Save and Close. Okay, so here it is. I have my allowance for doubtful accounts. Okay, number 19500. Okay, so that once that looks good, I can go ahead and now I need to create my allowance for doubtful accounts item. Okay, so again, items and services, I'm going to go ahead and create a new item, and that's going to be, once again, it's an other charge. What is this account called? It's going to be the allowance for doubtful okay. And then what again, my description is going to be to write off potential bad debt. Okay. Is it for taxable items? Again, you have the choice to do that. What account are you going to be associating this with? We just created it, the allowance for doubtful accounts. Okay. And I'm going to click OK. All right. So now that I created that debt item, let's take a look, right, at that invoice once again. So now that I have my account and I have my item, I'm going to go ahead and take a look at this invoice once again, $39.50. And let's go ahead and create this credit memo. So again, then I'm going to click refunds and credits. So now here I am, refunds and credits. It is now, I'm going to fast forward saying it is now February 16, okay? Or February 16. This is 3950C because it is a credit, right? If you want to put B for bad debt, whatever it is that you want to do. Now notice this. You have to deal with one service item, which is non-taxable, and one item that is taxable. So what you're going to do here is you're just going to enter in the information as accordingly, right? So in this case, I'm going to write off both of them using both accounts because I have to make sure, one, I also take the tax off because right now I'm charged $4.54 worth of tax. If I do not recognize that tax, then my tax numbers are all good. My sales tax numbers are all going to be messed up. And that's not what you want to do. You want to also write off the tax as well or take that tax off of the account. So what I'm going to do here is I'm going to go ahead and follow through. So the first one is he owes me $190 for those indoor services. So I'm going to change this and make sure I put the allowance for doubtful accounts. Okay. And because here it says taxable, I have to change that to service. It's only one item. You don't need to put two. And it's going to be for that $190. Okay. So that's that one straight off. Okay. So then the next one is going to be a taxable item that is $55. So once again, what I'm going to do here is I'm going to clear this out and put in my allowance for doubtful accounts. Okay, but this time I know it's taxable. So therefore, I'm going to put in here that is $55. And what's going to happen is it's going to calculate that $4.54. And what it does is if I go ahead and write it off, it will take this $4.54 of tax with it as well. Because in this case, right, did we ever receive this tax? No. So if I write it off, will it affect my taxes? No. In this case, yes, because I charged tax that I never collected. Okay. So again, memo, you could choose to put whatever you want to put in here. I'm just going to make sure I put in to write off bad debt on invoice number 3950. Okay. So once everything looks good, right, we got one taxable item and one non-taxable item. You should separate them just so that you can charge the tax on the appropriate item. So in this case, I am going to write them off and I'm going to put it in the allowance for doubtful accounts, okay? And I'm going to save and close. So now it's asking me what to do. I'm going to apply it to an invoice and I'm going to click OK. And it's going to tell me which invoice am I going to apply it to. So again, Mr. Bob Mason has two. Well, obviously this one's for $39.50. So I'm going to go ahead and click done. Okay. So what you're going to see here is on this invoice, right? We have it right here. You got $4.54 to make it $249.54. Boom, I have it, right? I put the payment in there for $249.54, right? Which included the tax. I already written off the tax. So therefore, now my account balance is 0, okay? And I go ahead and click save and close. So there you go. This is the allowance for doubtful accounts. Now notice this. Because I am not the tax accountant, what I essentially did here for this allowance for doubtful accounts is essentially create a placeholder account. So again, if I have accounts receivable, right? Let's take a look at my accounts receivable. Here it says that I just written off Bob Mason's $249, right? In this case, right, what I did is I created another account for the allowance for doubtful accounts. So this is going to be like, in essence, freezing the account. Okay, this person isn't active, but they still owe me money. What I'm gonna do is I'm gonna separate them so that I can keep an eye on this person, because I have to go ahead and call them up, ask them what's going on, why aren't you paying, etc., etc. So this is a temporary placeholder, and that's what you have to do as a regular accountant. Once the time comes, right, and you do file for your taxes, and for whatever amount that you're going to claim as a loss, you go ahead and report it to the tax accountant. And what they're going to do is they're going to create a journal, okay, for you to transfer the amount from the allowance for doubtful accounts and place it into the bad debt expense account. Okay, so at the end of the day, you're still going to have the bad debt expense account, but what you're going to do is you're going to transfer that amount over into the bad debt expense account as soon as you are for sure that this person isn't going to pay at all. So usually you wait till the very end of the year to do that, and it's called an end of the year adjustment. Okay, so if you have potential bad debt, you want to wait it out, like I mentioned before, right? Usually 6 months should be a good holding period to determine whether this is a complete loss or not. But you don't really report it till the end of the year because of the tax year, right? Taxes are filed at the end of the year or whenever your fiscal year is. So that's the same as going when you have to transfer the amount. So in this case, that's what you have to do for the allowance method. Okay. Any questions there?
No.
Okay. So that's just to write off bad debt. Okay, that's the whole section on using credit memos. Okay, so again, I'm gonna mention this many times. Do not confuse the difference between a vendor credit and a credit memo. In QuickBooks, it's very specific, but in the real world, you can use credit memo for anything. It can be applied as a vendor as well, right? But in this case, when we're using QuickBooks, you need to make sure credit memos are strictly used for customers, and they have options, right? You could choose it to return a product, refund a product, if a customer overpays. And now that the fifth one that we learned about credit memos is you could use it to write off bad debt. Okay. So let's go ahead and dive into the next section here, which is going to be batch invoicing. So a great example of how we can utilize batch invoicing is, for example, when you have like things like subscriptions or annual fees, right? That you have to issue to multiple individuals and they are all the same invoice, okay? So in this case, instead of having to create an invoice for one person individually and then having to copy and paste that over and over and sending it out to those individuals, you can use what's called batch invoicing. But it has to be the same exact invoice. Again, we'll talk about examples, right? So again, we're a photography type of service provider, right? We can have exclusive access passes for specific members who pay into the company, right? If they have membership dues, maybe they could get free access to this. Maybe they get discounts and so on and so forth because they're paying into our membership. That's a perfect example of using a batch invoice because there could be a selected few individuals who subscribe to your company, and what you're gonna do is you're gonna bill them every single time or something like that, right? You're gonna send them a bill, letting them know that hey, your monthly membership is due, or your annual membership is due. Okay, so let's go ahead and take a look at batch invoicing and how do we do that. So we're gonna go ahead and there's only one section and one section only. Okay, that will be up here in your customers, and you're gonna locate, create batch invoicing. When I locate it, batch invoicing. Batch invoicing. Right here, batch invoices. Okay? Only one location and one location only. You cannot do it in your customer center. You cannot do it on your homepage. There is no homepage icon for you to do batch invoicing because this may or may not apply to your company, right? Doesn't every single company have to have membership dues? No. Okay, so in this case, there's only one section, and if you are wanting to use it, it is right here. You go to customers on your menu bar, and you click on batch, create batch invoicing. Okay, so you may get this window where it says batch invoicing, yada yada yada. It's for individuals, okay, and I click OK. So then here is where we are going to be creating our group, okay. So again, because we are a photo service type of company, right? We can choose something unique, like maybe there's 3 tiers of memberships, right? You could be creative, like saying, tier 1 could be full access, tier 2 could be red carpet, and then tier 3 could be like, I don't know, the exclusive club, A-lister, I don't know. You could be creative, right? It's your own company. But for this case, we're just gonna call them club members. Very boring, but what this is what the book says, okay? So first you gotta do is you gotta select your group of people that you want to be part of your club member. Okay, so let's go ahead and create that club. So what you're going to do is you're going to create the group. Okay, so right here I don't have a group that's created, but I can create one, and I'm going to call this club members, right? Okay, and I'm going to click save. So there you go. Now I have a club member, and now I'm going to go ahead and proceed to select the individuals that are on this exclusive list. So I'm going to go ahead and pick on Ron Berry. Okay, we'll add him. Maybe Tim Fang is part of this club. Okay, and of course, let's make sure that Bob Mason is also on our club as well. And we'll put Jerry Perez as well. Okay, so we'll create 4 invoices, right? Here you go. I listed all of them, and these are going to be my club members. So now I can go ahead and proceed to the next one. Okay, and then now it says right here, you made changes to this group. Do you want to save it? Yes. So we now know our club members are those 4 individuals. Okay. So now we got to see, this is what we have to do. We're going to be creating our invoice, okay? So how do we create it? Well, straightforward. You got to start with the date. So let's say maybe club members, they're going to get billed every first of the month, okay? And what template do I want to use? You can use that one, that's fine. So what are the items that I'm going to be listing on here? Well, I want to ensure that they have dues. So here you go, dues. And again, each one, see membership, so photo club monthly dues, right, is $25 a month. So in this case, that's what I'm going to do, right? I'm going to say I'm going to issue it every first of the month, okay? And then now I typed in my item, and this is what the price point is. So once that's good, I'm okay. I can go ahead and click next. Well, do I want to have a customer message? So once again, thank you. You can even do thank you for your business. And in this case, you can say thank you for joining our club. You are our exclusive member. Thank you for joining our team. Whatever you want to put in. Okay, in this case, I'm going to do standard, whatever it says right here. Thank you for your business. Okay, so again, total on due on there is going to be $25 because it's just a service, right? It's not taxable. So I'm going to go ahead and click next. So what you're going to see here is now it's saying here you want to create 4 invoices, right? Now here is where the bad part is. Unfortunately, you cannot, you would have to manually change all of the invoice numbers, and then you have to look at every single person's terms, because not everybody's terms you can change. Okay, so for example here, right, you cannot change anything here. Okay, you would have to physically go to their invoice and change it manually, and you will be able to do that. Okay, so it's not like you're not going to be able to do that. Excuse me. So now that we are here, okay, we got all 4 peoples here. And everyone else, once this looks good, right? You can't make any changes to it. We're just looking at this. Now it's saying it's taxed and whatnot. Okay, so I guess membership dues are taxed. Which it shouldn't be. It should be service. Okay. So when everything looks good, I'm gonna go ahead and click create invoices. So that's what it's doing right now. Do you want to mark all of them to be printed, or do you want to mark all of them? In this case, I don't want to mark any of them because I have to edit them. Okay, so I click OK. I don't want to mail them out either. So I'm going to click close. So now it's going to create all 4 invoices, and wow, didn't do it. Okay, so I have to go manually go into each and every single one. It's supposed to show up every single one. So in this case, I do have to go to Ron Berry. So here's his invoice, right? Because you have to manually change all the numbers and sequence and everything. So in this case, but it does have the information that I have here, right? That, again, the dates there, you just have to just change the invoice number, and then you have to also change terms if necessary. Okay, I don't think it's fair that Bob Mason gets to take a discount while everybody else doesn't, and especially on membership dues, that's not fair. So again, you do have to go to each individual one and change it. So in this case, if this is invoice, maybe membership dues, right, they get a unique number. So this could be 4,005, I don't know. Any number that you want to do. Okay, 30 days to pay, save and close. So you do have to manually go into each and every single one of them and change them. It's supposed to pop up at the end. It's like all 4 of them is supposed to pop up, so you can just change them right then and there, but I don't know what happened there. Okay, so again, I need to change Bob Mason's because his is reflecting that he gets to take a discount. And no, he does not get to take a discount. You must change it manually to say he is not getting a discount. Okay. All right. So that's what you have to do, okay? Any questions in regards to batch invoicing?
No.
Okay.
No.
So once again, it is only necessary if you have some kind of means to, again, to, if you are charging a monthly fee or something like that, instead of having to issue one at a time, you could save time by creating batch invoices so you can just send them to multiple people. But of course, the only bad thing about that is if you do that, you may have to make changes to certain individuals before you send them out. So it's always good for rule of thumb to just double check your work to ensure that everything looks good. Okay. All right. So other than that, I'm gonna stop here. We're gonna go on our break real quick. So we are, so right now it is 9.